What is good, YouTube? China FX back. Hey man, listen. So in this video, I'm about to show you how I was able to catch over 200 pips trading USD JPY or the US dollar Japanese yen. So if you really want to learn how I did it, do yourself a favor by watching this video to the end. I mean, stick around to the end of this video. If you're also interested in catching moves like this on your own, just DM me on Instagram to get yourself enrolled in my one-on-one mentorship. If you also haven't yet subscribed to this channel, make sure you hit that subscribe button. Make sure you like this video and make sure to drop a comment down below. So with that being said, let's just get to business. Alright, so now starting from our 4H time frame, what's the first thing we need to do? So the first thing we need to do is to identify the trend of the market. And looking at our chart, what trend are we in? We're in a downtrend. Clear as day, we're in a downtrend. So after we've identified the trend of the market, the second thing we need to do is to identify our market structures. So now let's get into the chart and let's identify our market structures together. So starting from here, what do we have here? What the price created here? Price created a higher low, went back up and created a higher high, came back down and created a higher low. Why is this a higher low? Because this higher low is higher than that of its previous higher low. So now this becomes our new higher low. After this higher low was created, what the price do next? Price rallied back up to create a new higher high. After this higher high was created, what the price do next? It came back, created a low, created a high, created a low, created a high, created a low, created a high, came back again, created a low, created a lower high, then came back to create a lower low. Why am I considering this structure as a lower high? Because this structure led to the break of our higher low. So now this structure becomes our lower high. So at this point, we can say that there's a shift in market structure from bullish market structure to bearish market structures. So after price created this lower low, what did it do next? It came back to create a new lower high. Why is this our new lower high? Because this high is lower than that of its previous lower high. So now this becomes our new lower high. After this lower high was created, what did price do next? Price came back down to create a new lower low. Why is this our new lower low? Because this low is lower than that of its previous lower low. After this lower low was created, what did price do next? Price came back down to create a high, not a lower high, sorry. A high, not a lower high. Why just a high? Because this high never led to the break of this lower low. So this structure over here can't be considered as a lower high. Alright. So after price created this high, what did it do next? It came back down to create this low, came back up to create a new lower high. Why is this our new lower high? Because this lower high managed to break below our new lower low, thereby creating a new lower low. So after this lower low was created, what the price do next? Price rallied back up to create a higher high. So at this point, we can say there's a shift in bearish market structures to bullish market structures. Why? Because price managed to break above this lower high by creating this higher high. So after price created this higher high, what was the next thing I did? The next thing I did was to identify my key levels. Since price was giving us a series of lower highs and lower lows, which indicates for bearish market structures, all I was waiting for was for price to continue going down. So after price created this lower low, I was waiting for price to retest it, okay, by creating a new higher low. Then we can go back down to create a new lower low. But that's not what price did. What price did was to break above our previous lower high to create a new higher high. So all I was waiting for was for price to come back to retest our key level, which is the support level, so we can find entries to the upside. So after price retested our key level as a support, our swing traders or those who are swing traders could have gotten their entry after price gave us this bullish pin bar candlestick confirmation. They could have entered right here, placed their stop loss right below the wick of our bullish pin bar, and their take profit to any of these key levels, either this higher high or this previous lower high. Right? But since you are not swing traders, that's not what I did. So after price retested our key level, the next thing I did was to drop down to our H1 time frame to look for our entries. Alright, so now let's drop down to our H1 time frame to look for our entries. Alright, so now coming down to our H1 time frame here, what was the first thing we need to do? The first thing we need to do is to identify what the H1 time frame or market structure. So we realized on the H1 time frame market structures is also bullish, right? We have lower high, lower low, higher low. Yeah. So we realized that on the H1 time frame, the market structures is also bullish. So one thing we also realized on the H1 time frame, when price was coming down to retest our key level, it was kind of forming a chart pattern. Yeah, it was kind of forming a chart pattern. So all I did was to take my trend line, connect from this structure, which is point A, and this structure, which is point B, and also take another trend line and connect from this structure to this structure. We realized that when price was retracing to retest our key level, it was also forming a chart pattern at the same time. And what chart pattern is this? So this is what we call the falling wedge chart pattern. So when it comes to the chart pattern, how do you trade chart patterns? You trade chart patterns by waiting for the breakout of the chart pattern. Where did the breakout of our falling wedge chart pattern happen? Over here, right? Price managed to break out of the trend line with this bullish momentum candlestick. Yeah. So after price broke out of the trend line with this bullish momentum candlestick, that's why I went in for buys. Place my stop loss right below this level or this structure over here. My take profit to I think 1.2500, 1.2500, somewhere over here. Yeah, giving me a risk to reward ratio of 1:4.36, risking 49 pips to make over 200 pips. As simple as that. In case you didn't understand anything I did, make sure you go back to rewatch this video over and over again. Alright. And like I said earlier on, if you're interested in catching moves like this on your own, just DM me on Instagram to get yourself enrolled in my one-on-one mentorship. If you also haven't yet subscribed to this channel, make sure you hit that subscribe button and make sure to drop a comment down below. And make sure to like this video. If you also have any questions, drop your questions in the comment section or DM me on Instagram at CharonFX to ask me your questions. Yeah. So with that being said, I'll see you in the next video. CharonFX. Peace. I'm out.